So if you were to sell, you would sell about right here. Well, where was the price around right here? It was around 237. So you gave up $1 off the top. Yeah. Before you got the signal to sell. So there is that inherent problem with using this type of indicator on an intraday basis. It's not going to be it's not going to be non-existent. The delay is not going to be non-existent on a swing trade. It's just not going to be as pronounced.
And it's going to matter maybe less because intraday you have
to work
a lot faster.
A little bit.
Okay.
Yeah.
That makes sense. Thank you so much.
I'm not 100% proficient in it. I know about it. I've read about it like a bunch of times in different books. I just don't use it on an intraday basis. So my skills in it, they're not that great. The position board is accurate, Ram. I am long 30-30 on AFRM, and it looks like we're doing that dance with 31 at the moment. So yeah.
Ooh, nice.
Yeah, Affirm continues to be okay. I just want to see how it's going to do at this level because I don't want to give it, I don't know, I want to see what it does at 31 over here. But ultimately, I'm probably going to have to cut this trade if it makes a newer low, and that newer low is going to be below the break of this trough over here, right? This low area over here. So I'm thinking about 30.60 or so. So I've got, gives me about a 30 penny buffer from my entry and about 30 pennies from where we're trading at right now. Shout out JT37. Thank you so much for this lesson. Huge help. Absolutely would love to help you out. No question about Reliable Rudy. Again, technicals, over indicators. Why do stocks go up and down, buying and selling? Absolutely. We're just trying to give ourselves a more competitive advantage, but no disputing buying and selling and demand and supply is the reason why stocks move up, Adira.
Yeah, and I think like also, especially as someone who I did, like before I even started trading, I love knowledge, like I said, and so I did a lot of just reading about stuff. So I think it's like kind of nice to have an understanding of, the more technical, behind the curtain elements of trading. So stuff like, the indicators like the MACD and VWAP and everything as well, right? But I think it's also kind of different seeing it in action. And I think that's why MACD is maybe a less exciting, less flashy indicator per se, because it is lagging. It's a bit, I mean, they're all lagging, but I think MACD is a skosh laggier, to use a term that we kept trying to make up yesterday.
We brought that up yesterday.
Also, update on the Novo Nordisk short. We're doing swimmingly. We're about 12 cents in the money. We took a nice little dip there. So hopefully this trade, this stock will continue to shed some pounds. I need to stop making bad puns. And if we continue to go to the downside here, I would be pleased as punch. Very happy with this short right now, though. I'm just kind of keeping an eye on the market, seeing what else is shaking. Well,
everything is shaking right now, Dara. I got to talk about this. We're going to have to pause the lesson for a bit because everything is flying to the high side right now. We are at high a day on the NQ. Apple just made high a day. Tesla's very close to high a day. Softy's very close to its high a day. Amazon just made a high a day. Google just made a high a day. Not so on NVIDIA and not so on, well, we're close to high a day on Tesla, or Meta. Meta's the problem. Meta's not making high day. It's about $1 off the high day. Very strong move here through 16,000. Before we came on, I pointed to Adara. I'm like, look at the wicks below 16,000, how they were immediately bought up. There is a reason why that's happening. That's a reason why we see this over and over and over again. When you're at that very critical level, and I would submit to you 16,000 is a very important level, and you have this type of candle over here, which is not just a doji candle, but look at the body. This was a big move down that was immediately bought up by buyers. And then you had multiple attempts here as well to take it below 16,000, all of which were bought up. All the closing prints north of 16,000, and you were rewarded if you took that trade. Sucks to be me. I should have punched into that when I saw it, but we are moving up nicely right now on the NQ. I'm just going to do a quick analysis here to see where we could find resistance, and we are close to that resistance point at 16,075.
I was going to say that looks like it could be a sticky situation.
It is.
In there.
Right? I mean, you could chart the wick, you know how I feel about wicks, or you could chart the closing prints where we spent the majority of the time at. 16,075 is where I'm looking for possible resistance, and if we break that, we're looking at that high a day from yesterday, 16,089. We'll see if 16.1 comes into play, but anyway, strong move on the NQ and the corresponding components of the Nasdaq, like the Mag 7. All right, let's move on to Donchian. Yes, hard to say, probably even harder to use. Donchian channels. Yes. I used to say as Donchian, and then I noticed I was like completely,
Donchian?
yeah, Donchian. Yeah, anyway, Donchian. Donchian channels are 3 lines generated by moving average calculations that comprise an indicator formed by an upper and lower bands around the mid-range or a median band. So here's the upper band, you'll see that in blue. The median, you'll see that in yellow on my chart, and then the lower band you'll see in purple, okay? The upper band marks the highest price of a security over N periods. N periods is what you determine. So, for example, on my platform, I go into here and I go into my studies, different ways to do it, and then over here it says periods, and then I put in 20. You can put whatever period you want. The standard is typically 20, I do believe, okay? So that's what we're talking about when we say N periods. So the upper band marks the highest price of a security over N periods, while the lower band marks the lowest price of a security over that same N periods. The area between the upper band and the lower bands represents the Donchian channel, okay? So this over here, the area between the purple line and the blue line is the channel itself. We're not talking about the yellow line quite yet. That's the median. So this is the Donchian channel. All right. So this was actually made by a futures trader. Shout out to the futures trader out there, Stefan Arun. Career futures trader Richard Donchian developed the indicator in the mid-20th century to help him identify trends. It would later be named the father of the trend following system. Or I don't know who gave him that name, but whatever.
Someone did.
All right. Let's go. What do Donchian channels tell you? Donchian channels identify comparative relationships between the current price and trading ranges over a predetermined period. 3 values build the visual map of the price over time, very similar to Bollinger Bands, which we talked about a couple weeks ago, indicating the extent of bullishness or bearishness for the chosen period. The top line, again, identifies the extent of the bullish energy, highlighting the highest price achieved for a period through the bull-bear conflict. So this line over here, okay, is the highest price achieved over 20 different time periods. Now, on the 5-minute chart, it'll be 25-minute candles. On the daily chart, it'll be 20 daily candles. So that's the value that I've predetermined. You can change that to anything else. You can change it to 25, 30, but the standard is 20. And then when that price changes, you'll see a dip in that top channel. Same thing with the bottom channel, okay? The center line identifies the median or mean reversion price for the period, highlighting the middle ground achieved for the period through the bull-bear conflict. The bottom line, which is the purple line, identifies the extent of bearish energy, highlighting the lowest price achieved through the bull-bear conflict over that given period. All right, let's pull up an example over here. So in this case, obviously, the top line is green, the bottom line is red, okay? In this example, the Donchian channel is the shaded area in orange or yellow, however you see it, bounded by the upper green line and the lower red line, both of which use 20 days as the band construction, which is what we call the N period. As the price moves up to its highest point in the last 20 days or more, the price bars push the green line higher, and as the price goes down to its lowest point in 20 days or more, the price bar pushes the red line lower. So this red line is the lowest price over a 20-period span. Again, that's going to vary depending on what time frame you're looking at. You're looking at the daily, you're looking at the hourly, etc. When the price decreases for the 20 days, and we're talking about the daily now, when the price decreases for the 20 days from a high, the green line will be horizontal, like in this case over here, how it just doesn't move.
Oh, because it's the price going down is more in, okay.
And then it'll start dropping. Conversely, when the price rises from a low for 20 days, the red line will be horizontal for 20 days and then start rising, okay? So Any questions before I go on? I know that we probably lost a lot of people
So
here.
I think, yeah, so basically, if I may kind of try to understand this.
Sure.
So basically, it's kind of the range between the most extreme prices, and based on if we're seeing more movement in the upper part or the lower part, we can tell what direction we're kind of moving, if we're more bearish or bullish.
Well, yeah. Well,
Sort
hold
of.
on. Do you remember how we used the Bollinger Bands?
Yes, okay.
Right,
And
and
kind
how
of gauge where we're moving around.
Yeah.
Okay.
The Bollinger Bands, kind of if we were touching the upper band for a prolonged period and we had a big gap created between the lower Bollinger Band and the higher Bollinger Band, we kind of were suspicious. Are we in an overbought condition? And the opposite, when we touch the lower band for a while and the distance between the upper band and the lower band really expanded beyond the normal, what was normal looking at the actual price chart, we're able to determine what the average is. We were kind of like, oh, we're in an oversold condition, right?
Okay.
Overbought. And in that
This is a way of looking at that. Okay.
Very similar, except it's using moving averages to help determine that, and then using a mathematical calculation. So the difference between the, perfect segue, the difference between the Donchian channels and Bollinger Bands. Donchian channels plot the highest high and the lowest low over N periods. N is usually 20. While Bollinger Bands plot a simple moving average, an SMA, for M periods plus or minus the standard deviation of price for M periods multiplied by 2. We don't need to know the calculation. We just need to kind of know that they achieve the result in a different way. This results in a more balanced calculation that reduces the impact of big high and low prints. Because look, it stays horizontal for a very long period of time until it's moved. In the Bollinger Band, it's moving every which way all the time. And you can basically see that by observing what the Donchian channel looks like versus a Bollinger Band. Bollinger Bands, you're going to see, you know, peaks and troughs and spikes and rounded tops, whereas here you're going to see a lot more flatness, right? And that kind of helps remove the distortion.
Yeah, that one seems easier to read, I think, than the Bollinger Bands, which were a little wild.
They are a wild bunch there.
Yeah.
We're going to wet our beak on another little Affirm profit taker as we break above 31 and a quarter. Again, I'm very pleased with this $31 hold on AFRM. 6.5 to the good today, Adara. It was on the receiving end of an upgrade. You did upgrades and downgrades today.
Yeah, and a massive price target upgrade from $9.50 to $30. Like, whoo! That's big. Like legitimately more than like 66% price increase.
Legit,
like,
yeah, absolutely.
Wild. It's like more than 200. Yeah, I'm getting too into math there, but it's a crazy price increase. I was floored when I was doing the email this morning and I saw that. But yeah, Affirm had a great day yesterday. Shopify, which was also having a great day yesterday off of Black Friday, Cyber Monday related things, is doing the opposite, at least last time I checked, because we had a downgrade for Mr. Shopify. Shopify, how are we? Yeah, Shopify's not as, oh, okay, well, I say that and we just had a giant swoop below VWAP. So Shopify is definitely not great, but yeah, Shopify had a downgrade from Piper Sandler and a little price target decrease there too. But yeah, very much doing the opposite of Affirm, even though they were kind of dancing in lockstep yesterday.
You need to close that chat, open up a new one, because the production team restarted the stream because it was way too laggy. So I kept looking for questions or people talking in the chat. Nobody was saying anything. I was a little confused. I'm like, did we lose everybody or what?
Oh, there's so much happening.
Monty G, what's up, my guy? Sharif, got my guns out for the new profile pic. Thanks for the inspiration, my brother. Monty, tag me. No, I'm kidding. Send it to me, though, man. I'm always willing, you know, champion fellow weightlifters, and I'm very happy for you, my friend. Because, well, you know, no point in having money if you don't have health.
Also, we have a super chat from the Hayes Records, $1.99 super chat. Thank you very much. 2 to 3rd Green Day for your boy on Amazon. Cons. There's a little gorilla emoji. LFG fam. Congratulations to you, the Hayes Records, and thank you very much for the super chat.
Yeah, thanks for the Hayes Records, good friend of the show and an avid contributor and a hell of a trader too, an options trader. Oh yeah, he trades options. Shout out to him. It's on YouTube, kind of small. Well, yeah, I'll look at it in a sec, Monty. Shout out to you, my man. Make sure to hit that. Make sure never to skip leg day. Leg day, the best day. Today's leg day.
You have 2 leg days, right?
3.
Okay, I thought it was 2.
Yeah, it's
so
3.
Okay.
Sadly, the reason it's 3 is because I break up glutes, hams, and quads different days. Yeah,
That's smart. So you get to, they all get a little bit more TLC.
They do. Look at Affirm, baby. We are pumping up on Affirm, and we are days highs. We wet our beak there through the 31.40 break. Oh, baby. We're going to hit the dollar club. Shout out to the Katina man who's now on lunch and on his walk, probably walking in -5 weather, man. Every day is leg day, says Ram Ram. Absolutely. No, I couldn't do that.
With
that
like quite a few G's too, like it's leg day. I like it.
Right? Calm down there, Juan. Anyway, let's see what else we're talking about. What about donkey leg? I don't know about donkey leg. I know about donkey raises for calves, but I'm not sure anything about donkey leg there. Also, look at GME and Square. I was in GameStonk. And
yeah, that you said it was a nostalgia
I'm an
trade.
idiot. Look at that. I get out literally bottom
In your
wick.
defense, so how would you know it would go that high?
I mean, this was a nostalgic trade. It wasn't based on technicals. I don't chase these type of stocks, but you know, it was too good not to.
Sometimes you just gotta join the vibe, yeah.
Right. All right, let's see what everyone's talking about. Forget Affirm. Block is killing it, says Mark Susi. Let's have a look at Block, or as Neil likes to call it, Square. Let's have a look over here. SQ, which trades on the NYSE. Let's see what Square is up to on the day. Oh, baby, 4.33%. Look,
nice.
I mean, it's not as much as Affirm. Affirm's up 6 2/3.
Still nice movement, though. I get what they
Fantastic
mean,
movement. Yeah, no, who's going to complain about that? Yeah, good look on Square on the day. I'm not sure if there's a catalyst or it's just crypto related.
Or it could be like off of PayPal and
it could
like,
be
Affirm, just general like payment related.
Oh, here it is. Block shares are trading higher after it was announced Square and Afterpay sellers reached 70 million transactions over Black Friday and Cyber Monday, up 14% year over year. So that's interesting. Okay. All right, cool. Good for you, Square. I'm sure Alfred is happy off that, 30. I think we came down to $40 in the October lows. Who knows? Yeah, something like that.
Yeah, I like the Alfred updates too. Just
yeah.
we're always checking in.
Oh yeah. Alfred may or may not have a segment on the show weekly.
I think I overheard some.
Yeah, we're gonna see about that. He's gonna tell us about how to trade fundamentally.
It'll be different too because we do a lot of technical stuff.
We do.
Here.
It's exclusively technicals, right? Sweet Bean, 199 super chat. Thank you very much, Sweet Bean. No message attached. If you want to know anything or have anything to say, make sure to tag me, Sweet Bean, Dara, or I, and we would love to address your question. Thank you for that, though. Appreciate it.
Oh, never mind. They said, Sharif, please explain your take on wicks when determining price levels.
Oh, okay. Yeah, I'd love to do that. That is
because I know you have feelings about wicks.
I do. Okay. Well, let's talk about the futures wick, because this is kind of where I developed this whole. I didn't develop this strategy. This strategy was given to me by Arun. I did not come up with this, okay? He's a little slower in how he adopts this. He wants to see more price action at a particular level. But what he's looking for is a critical level to come into play. In this case, let's use a case in point on the MNQ, 16,000. We know 16,000, it's a 1,000 point level. It's the even 100 point level. We're definitely interested in it, just by virtue of the fact that it's 16,000. Now, does the price action support our belief that it's an important level? Yes, it does. Look at the morning price action. We get up right above 16,000, huadunk right away. We try to test 16,000 again over here at around 10:04. We huadunk. And then all these wicks into 16,000 are all sold off. So we know right away by how the price action is trading that 16,000 is an important resistance level. And now we know for a fact that the books say, I'm kidding, that resistance can become support if breached and breached decisively. And look what happens over here. Then, right at that 1038 area, we come all of a sudden, I think Fed Waller said something or another there. He got the market excited. We break 16,000 ever so decisively. We get up all the way almost to 16,050. We get into 16,047. And then we retrace. But look where we retrace to, Adara. Right to that 16,000, and immediately we're bought up. We make another pop into 1630. We come back into 16,000. We're bought up again. So now what we're looking for here is how 16,000 is being respected, not as a resistance level anymore, but as a support level. You got once, twice, and OB thrice opportunity to get into that bad boy as it tried to dip into 16,000 a few times. So you should have known right away. If you had done your homework and looked at the price action previous, you should have known 16,000 was an important level by virtue of the fact that it's 16,000. The price action supported that thesis because it kept rejecting off 16,000, and then it supported it again once it broke it and retraced down to it and found a lot of support in and around there. So that's what I'm talking about the wicks. Look at how, first identify what you believe to be a critical price level. On Affirm, when we were doing the MCAD analysis over here, MACD, I always say MCAD.
It's like MCAT. I think
Yeah,
that's why it
MACD,
sounds like
sorry.
MCAD, but it's, yeah, MACD.
Over here on MACD, look what we were doing at that $30 area, okay? We had how many wicks? This is the 5-minute chart, okay? 1, 2, 3, 4, 5, 6, 7, 8, 9 attempts to break $30 with wicks above $30 and closing prints south of 30. Right away, you know that that's a level. Okay? You can't wick into that so many times and then actually reject off it and not think, okay, this is a very important resistance level. So that's what I'm talking about when I'm saying look at the wicks. In the exact opposite way, Adara, we did that at 29, but on the long side today, we didn't have as many touches. 1, 2, 3, 4, 5 touches into 29, all the closing prints at or above $29, and then look what happened. So that's exactly what I'm talking about. Identify critical levels and then watch how the stock trades around there. Who's overwhelming who? Are sellers overwhelming buyers or buyers overwhelming sellers at that critical level?
Okay, that makes sense. And I think also it kind of goes back to what we were talking about last week as well, right? With like the more touches of a line of resistance, like a pattern or in, on VWAP, like however many times you poke through a thing, try to break the bubble before actually breaking the bubble, the more important that resistance or support generally is.
Yeah.
And then when you break above it, the more momentous it could potentially be.
Absolutely.
That has been my kind of
momentous. Could be a momentous trade.
Let's hope so. Let's hope we have some momentous trades over here. I am still in Novo Nordisk. I'm noticing we're struggling a little bit to get below that 101.45, but I have time. We're hanging out right now. We're chilling. If we do continue to struggle to break below that into that 101.40 area, I may just take my shares and run at that point. But honestly, like I am, 25-ish cents in the money here. I don't 25-ish cents, 20 to 25-ish cents here. I am not complaining. We are pleased as sugar-free Pepsi because it is Novo Nordisk. We're not going to drink punch up in here. But yeah, so this is going well right now with this short. This is the one trade I'm in, but I have my eye on some other things.
All right, coolio. Okay, we have about 5 more minutes and then we have to restart the lesson again. So we'll chat a little bit about some stocks. Elon, cool haircut, Sharif. Thanks, man. I couldn't deal with that whole poofy thing, man. You have no idea. Egyptian hair, it doesn't have an identity. It doesn't know who it is. Is it wavy? Is it straight? It doesn't know what it's doing at any one time.
It's like psychologically confused.
It's nuts. It's unique hair, to say the least. But yeah, I had to get rid of that. I had to get rid of it, man. It was too much work, and it was absorbing all the hairspray that I put on there. You know how much hairspray I had to put on that thing, man? Yeah.
Hairspray is hard because it's like a little bit goes a long way, and you don't realize how much, and then you're like, oh my god, I have to deal with this. Yeah, hair products, what a world.
Yeah, I know. First world problems, right? All right. Fat Figure, man, you always make me laugh. Always dropping hot lines in the chat, bro. You're a joke. I love Fat Figure.
I got a kick out of that.
All right, man. All right. Even Deez, man. Deez is on. He's funny as well. All right, guys. Any stocks you want us to look at? We have about 5 minutes before we have to restart the lesson. Put them in the chat. Tag Adara or I in the chat, and we'll ask some questions. It could be related to the content that we've been talking about today. It could be related to an equity you want us to look at. Maroon wants the thoughts on Tesla. It's an absolute rocket ship. You want to have a look at your friend,
I was just going to say, Stressla, sometimes a friend, sometimes my enemy. Yesterday, Stressla was Bestla because we had a nice little long on that one earlier.
Bestla.
But yeah, right now, I mean, I think I've said this a couple times. I think my issue when stocks are running up this much, at least for myself for trading, if you're not already in it, if you are in a Tesla long right now, felicitations, congratulations. This is a beautiful trade. But I think if you're not, I would say, in my opinion, exercise caution and be very careful about levels and risks. And I say that as someone who, when I first started trading, if I saw something run up like this, I would try to get in like right as we're hitting that 242.50, right? I'm like, oh, I want to be in there. The long isn't wrong. And it's like, well, it might not be, but sometimes you might have just missed the opportunity. And sometimes you kind of have to recognize that, right? With this Tesla long, though, there have been some identifiable dips that you can kind of jump into, right? So even right now around this 241.70 kind of area seems like it could be a dip. I would say if you see a potential dip opportunity, especially because the stock has run up this much in this short of a period of time, I would wait, kind of see if you have some confirmation and then jump in, because I think what I would do there too is when I would get into like a long, kind of later in the trend, it would end up retracing. And then I would kind of get swept up in the madness, like, lost in the sauce. So I would say at least, take this with a grain of salt if you like. But my personal, from my experience, I always like to just kind of wait for a bit more confirmation, especially if a stock moves as willy-nilly as Tesla can.
Willy-nilly.
So yeah, you have this great movement. Don't get too lost up on a potential movement to the downside. That is my look on Tesla. But also we have a very, very vertical looking kind of ascending channel, I have to say.
Hey, look at that.
So there we go. Yeah, we're reflecting back on past lessons over here. But yeah, Tesla ascending channel could be a potential dip buy, but I would have to plan it very carefully, very carefully. Also, someone mentioning PDD. Why is it up so much? PDD had earnings.
It's a rocket ship.
And it is, oh my God, 18%. Hello, PDD. Yeah, this one, though, slightly lower highs. For myself, I would, again, probably have to wait to kind of, like, it looks kind of compression-y. Because I see higher lows, and I see lower highs, and I see external compression.
Good job.
Thank you. So I would like
Hold on, I have to ask you a question.
Oh.
So, no, Ram, go to the chart, because we're going to talk about the price action. All right, so can you get your drawing tools out?
I can.
Thank you. All right, so yeah, do that compression. There you go. Now, how about the top one?
Oh.
Yeah, I know. You got to move that bad boy out of the way.
Yeah, I am very bad at
You can use the other tool. See the one next to it?
Oh, okay.
Yeah, okay.
Should've just done
So now, Adara, question for you. When does this no longer become a compression pattern? There's two right answers.
If it breaks to the upside.
Okay, but where? Now, what are the price levels that it needs to break?
Okay.
So pretend the question I'm asking you is an upside break, not a downside break. Okay.
So upside break. So we would have to break above the next high, right? It would have to break the high to the higher high. Or it falls to a lower low.
No. There's a channel, right? Why do you have that line there?
Oh, because it would.
So there's two.
Okay.
You're
so the higher high or a channel break.
There you go. So can you point that out to everybody? So guys, what we're talking about there, look at the current price action. It's at that 138. Where is it at right now? 138.90 something.
Almost 139,
okay?
honestly.
If it breaks through that crest, the middle crest, the middle one.
This one.
So that would make it a higher high, correct?
Yes, it would.
So then that would be one factor we would consider. What the other factor we would consider is the break of the actual trend line on what? With what?
Volume.
Bang. Fantastic.
Right, yeah, I mean, I appreciate, thank you so much, because I feel like I know this because, repetition and learning.
Repetition.
But yeah, so Pinto would do it looking pretty nice, though. For myself, too, I would like to kind of wait for a break of the compression wedge before wedging yourself into the trade. Yeah, there we go.
Good look there. I just want to mention Tesla here because you had a good analysis on Tesla. I just want to point out, guys, critical resistance level on Tesla over a 2-day period, the 21st and the 22nd, we saw a very clear resistance level at that 243 and a half, 243 and a third. You could even make the case for a 243 rejection itself at the whole dollar level. That would be my first area, and then I'd start looking at the half. So I'm gonna go ahead and put my neck out there and say 243 resistance going over a span of 2 days. That takes us back to the 22nd and 21st. We're awfully close to it now, 242 and almost 3/4 high a day. We're at 242 exactly right now. But if we get into that 243, that is a 2-day resistance level. Now, I should mention that this 243 resistance here took place in the pre, and very, very early in the pre as well. That was like a 5 a.m. print until around 9. So this was on lesser volume over here. However, this high was made during midday. Look at all these lower lows. What a fantastic lower low that we had on the 21st. But anyway, 243, possible resistance on TSLA. I just wanted to point that out in case we really start trending here, but it looks like we're breaking down right now below 242, so we'll have to wait and see how that does. All right, AFRM got my final beak wet. I'm not out of the position, but the last one that I got was right at that 31.50, coming right back down now into that 31 and a third, possibly 31 and a quarter. I'll be looking for this one to maintain its current pattern of higher lows. I don't want to see it break below that $30.90 area. That was a clear trough at around 11:30 or so. So I'm looking for a trend here. I'm a trend following trader. I don't take counter trend trades typically. So if this trade comes down, or this stock comes down below that $30.90 area, it is no longer valid in my books, and I should be getting out there. So just wanted to make that point clear. All right, let's now restart the MACD. Do you want to start this one, and then I'll
start MACD.
Yeah.
So basically, let me get this pulled up. So the MACD is the moving average convergence divergence. That is what it stands for. We were talking about moving averages yesterday, so it feels apt that we now move on to the MACD today. But what is it? So basically, it is a line that you calculate by subtracting the 26-period exponential moving average from the 12-period exponential moving average, or the EMA. And so the signal line is that's a 9-period EMA of the MACD line. So you have two lines, your MACD line and your signal line.
Should we put them up?
Let's put them up.
All right.
I can try to add them here for
my
Novo Nordis.
There you go.
There we go.
There you go. Add that bad boy in there. And there she is. Right on the bottom there, kind of hard to see.
Oh, yeah, it's like, so that you
What's
can see
going
the,
on over there?
I might have to change the.
You might have to change the settings. So maybe we'll just put up my chart for now, and then you can talk
I will play
away.
around with the settings.
Yeah, there it is, Ram. Yeah, you can just continue. We'll just show my chart.
Yeah, okay, perfect.
Yeah.
I appreciate that. So yeah, basically, so we have two lines here. We have the MACD line and the signal line, which is the 9-period EMA of the MACD line.
Okay.
And so also, exponential moving averages is used too, partially because these ones are a little bit more, they're still lagging indicators, but these ones are a bit more responsive to recent price action. Also, shout out to Ramin in the chat.
Yeah, she wants McDonald's because we're talking about MACD. This woman is a menace to society. She bullies everyone into bringing her Starbucks.
I was gonna say, I feel like she mentioned, I've heard McDonald's mentioned a few times. But
Ram.
But yeah, it's best used with the daily periods, where the traditional setting of the 12-day EMA over the 26-day EMA over the 12-day EMA with the 9-day EMA for the signal line is going to be the default, and the MACD will trigger technical signals when the MACD line crosses above the signal line, and that is when it's a buy. But if the MACD crosses below the signal line,
there you go.
Then it will be a sell. And so it can also help gauge if a security is overbought or oversold. And so that happens when we have wider distance between the lines. So that, the wider distance you have, the more kind of dissonance there is, the more divergence there is, and the more possibility there is for a reversal. However, this is not perfect, because the biggest issue with MACD is it can have some false positives.
Yep.
Where there are signs, it indicates a potential reversal that never actually comes. Or it'll have the opposite, and it'll actually, not indicate a reversal, and then we'll have a reversal, right? So you do have to be very wary of the MACD lines, and much like pretty much every indicator, use it A, with caution, and B, in tandem with other indicators. That is the quick MACD kind of rundown here.
Absolutely, that's bang on, spot on. So the points that I want to make here is what Adara was talking about. So on my line here, the blue line on the bottom, that's the MACD line. The purple one is the signal line. So what you're looking for are crossovers between the line to kind of give you an idea, should I be going long or short? So the MACD line is the blue one. You're looking to go long when the MACD line crosses the signal line to the north side, okay? And that you would have gone long over here. We talked about how this was a delayed indicator, and how by waiting for the crossovers to take place on the chart, you are by definition going to give up part of the move, and that is part of it. When you use moving averages, that is normal. You are going to leave money on the table, both on the on the buy side and on the sell side. That's just normal. Then you're also looking for the distance between the two lines to be above average. So you can kind of gauge that just by looking at the lines, zooming out and looking, well, what's the average space here between the lines? And then in this particular case, when you clearly see that it's at its widest, you can have an idea, it's not exact, that you are possibly in an overbought condition, right? And that's exactly what happened here when we kind of topped out at that $30 level. This was kind of indicated to us, hinted to us by the moving average convergence divergence indicator, by the distance that we had between the MACD line and the signal line. And then that was supported by the actual price action itself. When we saw all the wicks into $30 that were immediately sold off and all the closing prints came south of 30. And then what we had was a decided sell-off where we made a bit of a double bottom there at 28.50, okay? So that's $1.50 possibly worth of profit there. I'm not saying you would have got top wick and bottom wick, but you had possibly $1.50 worth of profit. And that's number one. Number two, you are looking for where it's trading above or below the baseline. The baseline is your 0.0, and it's kind of hard to see, but it's right there, guys. This 0.0 area. And the reason we don't have much below 0.0 is because, well, in this particular time frame on a firm, it's very bullish. So we have more on the y-axis here that's positive than negative. Okay, but what you're looking for is where we are relative to the baseline, and that can give you an idea: are we in an overbought or oversold condition? But like Adara says, there may be times when this kind of gives a false signal, and that's normal when you're using moving averages. So moving average, convergence, divergence, very important if you want to use that on a daily basis. You got to be quick with it. I don't use it intraday. I use it for my swings. Now, we want to talk a little bit about its similarities or lack thereof with the relative strength index. And we haven't talked too much about the RSI, but I've referred to. We're going to get to the RSI when we have our week on oscillators. Right now we're on indicators. We're not talking about oscillators. We will talk about oscillators and their importance in the coming weeks. But with respect to the similarities and differences between MACD and relative strength, the relative strength index aims to signal whether the market is considered to be overbought or oversold. That's its primary function in relation to recent price levels. The RSI is an oscillator that calculates average price gains and losses over a given time period. The default time period is 14 days with values bounded from 0 to 100. That's what the RSI is. And a reading above 70 suggests overbought, while a reading below 30 is considered oversold, with both potentially signaling a top is forming or vice versa. The MACD lines, however, do not have concrete overbought or oversold levels like the RSI and other oscillator studies do. Rather, they function on a relative basis. That's to say, an investor or trader should focus on the level and the direction of the MACD signal lines compared with the preceding price movements in the instrument at hand as shown here. Okay? Let me load up this bad boy and bring it in. Way. Yeah, I think that you should be able to see it there. Oh, no, come to the chart. So what we're looking for are the preceding price action, okay? So we talked about this. So if the MACD was preceded by a big move up, and then it has a negative move, but then it crosses up again showing bullishness, that would be considered a bullish signal. In the exact opposite way, it can be considered a bear signal if you had previous price action that was downtrending, it moves up, then it breaks right back down, it continues a signal. So like we talked about with some of these chart patterns, there are continuation patterns or reversal patterns. This one you could kind of make, even though it's not the same, a comparison to a continuation pattern. So that is MACD. For now, quickly back to Affirm, because we're knocking on the door of 3150 again. So this is a good little look here. We've obviously got resistance at that 31.5. Whether or not you earmark that as a level where you expected resistance doesn't matter, because look how many wicks you have off that 31.5. But I would say to you that the trend hasn't been broken. We're continuing to get higher lows.
Yeah, I was going to say, no, it looks pretty consistent.
Yeah, exactly. The trend hasn't been broken. Again, this trade, to me, is no longer valid if it makes a new low. The new low comes at that $30.75 area. I'm looking at this area over here as the trough that I have identified as the previous low. So if it breaks this area, I'm gonzino, but I'm going to continue to hold this. Here we go again on Affirm. What a move up. We break through that $0.50 and we wet our beak.
That the money train was well earned there.
There you go. Spinning the money for the Katina man. He's not here. He's probably somewhere.
He's probably somewhere.
You could tell I kind of got caught between two thoughts.
I could tell you realized after you said it, but I was still not going to let it slide.
Right?
That's who I am.
Anyway, Affirm continue to pump up. We're a buck. Oh wow! Look at Affirm go, man. Here we go,
Woo!
Guys. This is an 18%. Neil, 18% short. 20-something%. Neil says short on for the percent of the short of the float is about 20-something% short. So we know what happens when we have a higher short float. It can squeeze, and it looks like it's doing that now. It had a great day yesterday. It's having a good day today. High single digits Adara here, 7.5%. We could possibly see even more. So
it's a beautiful chart too. I have to say there is not much standing in Affirm's way right now. Yeah.
All right, want to move on to the Donchian?
Let's do it. Also, we have a question from Denver Trader.
Yeah, I didn't take any questions. My mistake.
Or it's not really a question, it's just kind of a statement, but either way of interest. It's important to understand bracketed markets versus trending markets when using overbought, oversold indicators. So I was reading about that a little bit yesterday when I was just taking like notes on RSI. But yeah, no, I think we were talking about that yesterday too with regards to the moving averages. If you're in a consolidated market and you're having like an automatic buy, sell, or whatever trigger with just, golden cross or death cross, sometimes it can be a little tricky if we're in the more sideways markets. I remember that being a thing. So I guess, to what extent would the MACD then impact?
I actually don't know the answer to that. I got to tell you the truth.
Okay.
I'd have to look into that. But that's a good point that he brings up there. Nothing really to add.
Yeah, I thought it was an interesting comment, so I wanted to share that.
Yeah.
But yeah, Donchian channels.
Should we take any questions on the MACD?
If there are questions on the MACD,
tag Adara and I in the chat there if you have any questions.
We like questions.
About the MACD. But look at Affirm go. We just took another beak wetter there through 31.65. Guys, we're up 7.25 now.
That's so good too from where you got in.
It's rocketing up, Adara. It's rocketing up. It's a good, steady, calm trade. And it's giving you plenty of opportunities on the retracements to get in. I don't like chasing these bad boys, right? Look,
you don't really have to chase this one, honestly. Look, you got a great
on the trough, man. That's where we're looking. And that wasn't for no reason. Look at this. You see this entry over here?
Yeah.
Look, this is the resistance level from earlier.
Oh my gosh, that's
resistance
gorgeous.
becomes support, right? So we've been talking about that umpteen times, right? So Affirm continues to be the gift that keeps on giving. Tag Adara and I in the chat if you have any questions about MACD. Sharif, how does MACD compare to Bollinger Bands? So I wouldn't compare MACD to Bollinger Bands, but I would compare the next topic, the Donchian channel, to Bollinger Bands. They're calculated differently. Adara is going to talk about that in a second. I would compare MACD maybe a little bit to RSI because with respect to RSI, you're looking for overbought and oversold conditions. It's one of the ways you can use RSI. MACD also helps you kind of gauge whether we are overbought or oversold. The key difference between them is there's no delineated levels on the MACD to say, in this level, we are overbought. Under this level, we are oversold, like there is with the RSI 70 and 30. The MACD a little bit more left to your interpretation and your assessment of how it's the particular instrument is doing. So that's what I would say to that. I wouldn't compare Bollinger Bands to MACD. I would compare MACD with RSI, but they are not the same. One uses moving averages and one's an oscillator. And we're going to talk about when moving averages are appropriate versus when oscillators are appropriate. I kind of alluded to this earlier. Moving averages are good for a trending market. If you're going to use moving averages in a consolidative market, you're going to pay through the nose. I promise you that. However, there's a fix, and that's using oscillators. Oscillators are better for consolidative markets, and then you save the use of the moving average style indicators for trending markets. How do you tell if we're trending or consolidating? Look at the price action. Is it tied within a certain narrow? It doesn't even have to be narrow. Is it tied within a certain range where you're looking at it, say from a year on a year basis, and it's very, you know, sideways, up, down, but within a certain range? Or are we up and to the right or down and to the right? That's how you can be able to tell, are we trending or are we consolidating? Adair.
Yeah, very interesting. We also have a question from King Zeus. Do you recommend using the MACD in isolation, or is it more effective when combined with other technical indicators? So yeah, so like I was kind of saying earlier too, because I was asking this question to Sharif, and I think this has been something that's been kind of a recurring theme for the whole kind of new midday so far with regards to how to trade, is yeah, I mean, I think with every indicator, not every indicator is going to be effective with every stock. So not all stocks respect all indicators at all time. Par exemple, because I have Tesla up right now, Tesla and VWAP, very much an area of interest earlier today where we kept having those failed, those touches of VWAP that we were failing with the wicks. Then we flew above VWAP. Now VWAP and Tesla should not be in the same conversation. Tesla has well and truly eclipsed VWAP. You know what I mean? So it's like some indicators can be valid earlier in the day and they're not necessarily going to be valid later. But yeah, I think with all indicators, you really do need to look at least, you know, in my opinion, my experience, kind of see, are there, you know, multiple that are valid? Like if, you know, the MACD is valid, are there any other indicators that I can use as confirmation of this trend, right? Or is there anything that other indicators are going to tell me that will dissuade me from entering this trend, right? So I think it is really kind of, it's nice to have the ability to kind of reflect on other indicators. I would say, we were saying this yesterday too, I believe on the midday, but we were basically, like Sharif and I were kind of talking about for a little bit, that there is, you know, if you see, you know, something in an indicator, like for example, earlier with this clear area of resistance that later, you know, we truly eclipsed when the long really began on Tesla. I think that, you know, really good point here. I think if you see something like this, then definitely don't ignore it. But if, for example, if Tesla, like right now, not interacting with VWAP at all, I would not, for example, if I enter, you know, along here, I'm not going to set my out at VWAP because that would just be so far below where we're trading. Do you know what I mean? So I think to answer your question in a very long-winded way, I think it's good to kind of use indicators in tandem when it makes sense to use them in tandem. So if an indicator isn't really working for you or with you or in that specific stock or asset, don't waste your time trying to analyze it, right? But if you do see it moving, if you do see that indicator forming as an area of support or resistance or kind of confirming the trend, then definitely act on that. So I would say, yeah, it very much use your discretion, but generally don't use indicators in a bubble, kind of use them in tandem with other aspects, especially something with like MACD, which is a little bit leggier.
Absolutely. All right, should I do the Donchian or did you do that?
No, I did not get Donchian yet, but I can start with Donchian for sure.
All right.
So Donchian channels are a technical indicator. And they basically, they seek to identify.
Should I do it because I've got it up on my chart?
You do have it there.
I don't mean to take it away from you, but
no, I appreciate
you've got to set it up on yours. All right.
Thank you.
What are Donchian channels? They're not donkeys. All right, calm down there, chat. I see you guys with the comments. Come to the chart room. Donkey channels. No, kidding. But yeah, that'd be a nice little nickname, a little pet name for the indicator. Donkey channels. No, they're Donchian channels. Let's put some respect on that future trader's name. What was his name again? Richard Donchian or something like that? What was his name?
The father of trend following.
Yeah, Richard Donchian. Yeah, the man. We gotta respect the man. All right, guys, what are Donchian channels? Donchian channels are 3 lines generated by moving average calculations that comprise an indicator formed by upper and lower bands around a mid-range or a median band. On my chart, the blue upper band, the median band is yellow, the lower band is purple or violet, okay? Well, however you guys see that. Okay, the upper band marks the highest price of a security over N periods. And N, in this particular case, is just a variable. Typically, though, you're using a 20-period, you're using 20 periods as your default. Now, whether that's 20 periods on the 30-minute chart, so 20 30-minute candles, or 20 days on the daily chart, it all depends on the context in which you're viewing it, okay? So you have to make sure that you understand that it's not just 20 days when you're looking at it on the 30, it's 20 periods, okay? So the upper band marks the highest price of a security over N periods, 20, while the lower band marks the lowest price of a security over N periods. The area between the upper and lower bands is the Donchian channel. So the area between up here and down here, that's the channel, okay? Now you'll notice, like you do with Bollinger Bands, like you did with Bollinger Bands when we talked about channels, is that there are periods where the channels are further apart and periods when they're narrower apart. And that typically has to do with how aggressive the price action is either moving up or down. The narrow periods, as you might have guessed, are areas where there is more consolidative price action. And that's one observation that you can make just by looking at it, okay? This was created by a career futures trader, Richard Donchian. He developed it in the mid-20th century, not like you guys care, but he's known as the father of trend following, and he was a future trader.
That's intense. Like, imagine how many other trend following traders had to be like pushed aside for him to be the father of trend following.
Get out of here, you lowly non-creator. No, I don't know what I'm saying. What do Donchian channels tell you? What are we looking at them for? Donchian channels, Ram, come to the chart. Donchian channels identify comparative relationships between the current price and trading ranges over predetermined periods. 3 values build a visual map of price over time, kind of similar to Bollinger Bands, indicating the extent of the bullishness or bearishness for the chosen period. The top line, like the blue, identifies the extent of bullish energy, highlighting the highest price achieved over the period through the bull-bear conflict. And we know what the bull-bear conflict is. It's about, the price action. We talk about this all the time. The competition between buyers and sellers. Who's winning out? Who's overwhelming who? What's happening over there? How come things are moving all over? She's using all these effects, Ram.
It's funky.
Yeah. Look at her. Look, what is that, bro?
It's Donkey.
I gotta hit the fail on that after hitting the bank. No, I'm just.
I love that the screen just like pulled back to reveal Donkey. That was beautiful.
She's slick with it.
Oh, Bears versus Bulls enjoyed the Donkey cameo.
The center line, yellow on my chart over here, identifies the median or mean reversion price for the period, highlighting the middle ground achieved for the period through the bear-bull conflict. The bottom line, like we talked about, identifies the extent of bearish energy, highlighting the lowest price achieved for the period through the bull-bear conflict. Okay, so the shaded, can I get this area shaded over here? Let me just see if I can do it, because it's supposed to be shaded. Shaded. No, it doesn't let me shade it. That's kind of silly over here. Well, whatever. Maybe I'll use this example. Open image, a new tab. There we go. I need it to be shaded, that's why. In this example that we got up on the screen, the Donchian channel is the shaded area bound by the upper green line and the lower red line, both of which use 20 days as the band construction, or the end periods that we talked about. As the price moves up to its highest point, like look over here, right? As the price moves up to its highest point, which on this particular daily chart, it would have been right up here, okay? The price bars push the green line higher, and as the price goes down to its lowest point, in the case over here, it pushes the red line down to its lower point. When the price decreases for 20 days from a high, the green line will be horizontal and then start dropping. So what does that mean? So the highest price action we had in November of this year over here was around right here. But look how long it stayed horizontal. And then it started to come down as we never breached that peak again. So this area over here was not touched by any of the later price action, and therefore it started to come down. That is until this candle over here, when it made a newer high and therefore it popped up. So what it's saying is it's going to stay horizontal for around 20 periods unless a newer high is made, and it'll start coming down as the price action made its way down. So as you can see here, the price started coming down and you had a little bit of a dip on it, but it bounced right back up because we had a new high. Okay? So what are the difference between the Donchian channels and Bollinger Bands? Because they're kind of both have that, that effect of straddling you in from the top side and from the bottom side. Donchian channels plot the highest and lowest low over N periods, N being typically 20, while Bollinger Bands plot a simple moving average, or SMA, like we talked about yesterday, for N periods, plus or minus the standard deviation of the price for N periods multiplied by 2. You don't need to know how it's calculated, you just need to know it's a little bit different. This results in a more balanced calculation that reduces the impact of big, high, or low prints. And I'm sure you can visually see that. Compare this to Bollinger Bands. Let me get a Bollinger Band picture. But this one, you have much longer periods where you have a flat top or a flat bottom, whereas Bollinger Bands, you would have spikes every which way. Let me pull up an example. Bollinger Bands, images. Bro, I don't want to have to ask twice. When I say something once, I want it done. Let's go. Images. There we go. Let's pop this bud.
Yeah, it looks,
Yeah.
like from what I can tell, I think the Donchian channel is a little bit cleaner looking.
Yeah, so let's pull this bad boy up over here. As you can see with Bollinger Bands, you've got peaks and trough every which way, so much more noisy than with Donchian channels, which have longer periods of horizontal tops and bottoms. What, the Donchian thing? It is. Yeah, it is, because of the donkey, right? It probably making you giggle because of the donkey thing. The limitations of using Donchian channels, though. Markets move according to many cycles of activity. An arbitrary or commonly used end period, so for example, if we're using a value of 20. What if you use the value of 30, right? An arbitrary or commonly used end period value for Donchian channels may not reflect the current market conditions, generating false signals that can undermine trading and investment performance. And we talked a little bit about this when we talked about using of indicators. It's sort of like a group self-fulfilling prophecy. We talked about this with VWAP. Well, why are so many people into VWAP? Why is VWAP so often respected? Well, we know that hedge funds typically use VWAP to judge their traders and see whether they got a good or bad price on a given day. Fine, we know that that's used. But we also know that retail traders love VWAP, and they chart off it a lot. So there is this group self-fulfilling prophecy that if we're all using that particular indicator, it then becomes relevant just by virtue of that fact.
Really?
Yeah. So that's the case here, what they're talking about using a random number rather than 20 for your N value. If you use 25, use 30, for whatever reason you're doing it, that lessens the chance that others are using it, and by virtue of that fact, it may give you false signals, and it may not, give you that full picture, because not everybody is looking at it the same way. But when you're looking at what everybody's looking at, there tends to be more respect to the levels. Whether you believe that or not, that's probably a different story, but that is the look there. You know what I noticed? We didn't do Search Trader. Ram. We got to do Search Trader. All right, guys, we're going to do Search Trader now. We are brought to you by Search Trader. Account funding of up to $1 million. Keep up to 90% of the profit. Enjoy relaxed trading rules with an 8% max trailing drawdown on all new accounts. Shout out to the folks there at Search Trader who still have that trading contest. Oh, it's been extended. It is now the December trading contest. It was November before. Top prize, Adira, 1,000 smackaroos of cash, and you get a $100,000 addition. So register now to figure out whether you're a good trader or not. Right? No, I'm kidding, of course. But
I was like, that got so intense.
you like that?
You're a good trader.
I definitely fail on that for sure.
It'd be stressful, yeah. It sounds intense, but they're having that. Any
questions with respect to these Donchian channels for Adira and I? Put them in the chat. Anything to add to that?
There is actually a question here, or it's not really a question, it's just kind of an observation, or I suppose, or a comment from Glenn Smith. Donchian channels seem like a good place to help identify an equity for a flat bottom break.
Very interesting. You know what? I gotta plead ignorance on this one. And let's have a look. Let's look at Apple, right? So let's look at this Donchian channel here on AAPL. Let's see. Did we get any flat bottom breaks here on AAPL that we can kind of have a look to see and verify whether or not?
It was the dead one. There could be a flat bottom break somewhere.
Apple kills me. Let's look at the daily here for a second.
That was so dramatic. So upset.
I know, right? This is the daily on Apple for the.
For a while, it was looking beautiful.
Yeah, it's not a bad look. I don't know, Glenn, if that's accurate or not. I got to tell you the truth. Again, it's not something that I typically use often, but yeah, I'm gonna have to, I have to think about that one. All right, guys, we are moving down here on Affirm. We just kind of gave up the ghost there, rejecting that 31.75. We're coming back down into that 31 1/3, 31 1/4 now. Previously, you saw me earmark this trough over here as the low that I was charting off. So if it had made a low below $30 and like say 80 cents, I'd be out. But that's no longer the low, the most recent low. We made a new low over here at 31.20. So if this one comes into that 31.15 area, I'm gonna have to cut it, even though maybe the better trade here would be give it to the whole dollar level at 31. I'm gonna have to think about this one, but it's either gonna be that 31.15 or a 31 hold, depending on you know, how I feel, because I'm not really too sure about this area here being a defined low. Let me see it on the 5-minute chart how it looks. And there it goes. And there it crashed. Okay, let me just load that bad boy back up, and then I'm gonna look at it on a different time frame over here. There it is. So yeah, see, when you look at it from the 5-minute time frame, this one doesn't look like a very clearly defined low. I'm gonna have to stick to that $31 level. If a firm breaks $31, I'm out. Put it that way. Okay. All right. Anything? Any questions or anything to add to what we've been saying before we yap about something else right now?
Oh, there's King Zeus in the chat. How does the choice of time frame impact the reliability and effectiveness of Donchian channels?
That's a good question.
That's a good question.
I don't know the answer to that.
I know, I mean, it's a little bit different because you are using like the 20 period to form the channels, right? So you have to keep that in mind. But yeah, I think with what I mean, keep in mind. No. What you're saying is right. But keep in mind that it's 20 periods. Yes.
So
that could be 20 day, 20 hour, 20 what have you. That's a good point too. I think I got a little lost in the sauce there. But yeah, with my thing too, with all of these kind of indicators, especially when we were talking about chart patterns, because a lot of times you will have patterns. Like last week, we'd be like, oh, like you have like a bull flag, for example, on like the 5-minute. So then look for some other confirmation on like the 30-minute or the 10-minute. You know what I mean? So I would say, with regards to time frames, my kind of blanket statement answer is always look for confirmation on other, other indicators, other time frames. Kind of see what's shaking before you kind of dip your toe into the water, perhaps.
Agree. Absolutely agree. All right. Let's see what people are talking about here. Desi, Sharif, Adara, my HD longs, Home Depot, are $10 in the money. HD moving big time. Money. We're going to spin the money for you, Desi. There you go. You get it, my guy. You get it right there. Let's have a look at HD. Home Depot having itself a day over here.
Oh my God.
Yeah, not a bad look. From that 309 dip.
Home Depot's like renovating the house over here. Oh my God.
Yeah, I'm assuming you're long way before today because we don't have $10 worth of range. So if you had to have gotten in at 304. I'm assuming you got in back on the 21st. Let me know, Desi. But either way, good for you. Happy you're printing. Magic Mike, the best name in the chat, baby. Sharif, I wrote an indicator yesterday, and now I feel I might have rewritten the Donchian channels. Really? Did you write that on TradingView using their indicator maker, or did you write that using AI, or how did you do it? What do you write in Python? I'd love to know. Tag me, let me know. Yeah. There's guys on this floor over here that they program. And so they'll program, like, you know how customizable P-Pro 8 is, man? It lets you connect through an API. So you can like make your own software that connects to P-Pro 8, and you can make all these buttons that don't exist.
I was going to say some of the P-Pro 8s like look different than other P-Pro 8s, like when you're just walking by. So that's interesting to know.
There was a trader, really cool. He's no longer here. His name is Cash. Shout out to Cash. We miss Cash on this floor. He's a computer programmer, and he wrote this entire software to help him get out like percentages at a time.
So he really made P-Pro 8 work for him.
Yeah. It was like a legit software that connected directly with P-Pro 8. A lot of people can do that. Like you can do it on my platform as well, but you have to be able to program.
Yeah, I'm not a programmer or a coder, so massive respect to people who can do that.
100%.
Very impressive. Also, yeah, Desi said, yeah, they're swinging for December. That was it with Walmart.
Awesome. Kill it for Home Depot. Yeah, absolutely. Kill that, Desi. Happy for you. A Denver trader. Python is pretty easy to start with. I'd recommend for traders. I used to be a programmer back in the day. Thank you for that. That's what I've been hearing from other people as well.
I always hear Python.
Yeah, to wet my beak in the programming world, Python seems to be a good starting place. Thanks for that. Let's see what else people are talking about. Just in time. I love that. Just in time.
It's a pun.
Yeah, I love it. Sharif. Want to take a quick peek at the Doge chart when you get a stack. I don't even know how to pull that up. Katina, man, what do you use for your crypto analysis? What website? You don't? How do you look at your Cardano? CoinGecko. Thanks, Katina, man. All right, we're going to have a look right now at CoinGecko. All right, let's CoinGecko. There it is. Okay, cool. Let's go over here. Let's have a look at our friend Doge. Where is it at? Cardano. There, Dogecoin. Okay. How do we do the chart on this thing?
Oh, I think if you scroll down, maybe.
Okay. Oh, there we go.
Okay.
I don't like this. There we go. That's what I want to see, baby. Okay. So how do we zoom out over here? Okay. So there's no way to zoom out. 7 day. Okay. Let's go 14 day, 30 day. Doge. Yeah, look, Doge is in an uptrend. There's no question about it when you look at the 30-day. To the moon, says the Chilean nightmare. I love him. He's all up in that crypto life. Yeah, Doge, look, it's an upward channel. You've got, obviously, a defined high over here that you're going to need to break in order for the channel to continue. On Doge, I don't know too much about what's happening with Doge. I haven't really heard the Musk man say anything about Doge lately.
That's a new nickname. I've not heard that one.
Yeah, he's
the Musk man.
Yeah, but 24 hours, we obviously have a bottom here at 7.7 pennies. That was a nice hold there. And then you popped up into about 8 pennies. This isn't my world, guys. You know, this is not what I do. But yeah, decent look. Let's have a look at what else people are asking. Nicole Harris, shout out to Hotlanta. Google Glasses and GPT, everyone can use program language, calculus mindset. I like that. That's actually not a bad look at all, absolutely. Because I think it can read, it can make suggestions for you with that new Meta AI glasses, and then obviously you use ChatGPT to actually write you the code.
That's neat.
Yeah, that's actually quite smart. What made people look at HD? I don't know. You'll have to ask Desi.
Well, I know it was like an earnings thing recently.
Well,
yeah,
it was. Yeah, they did have earnings. ES is plummeting. Well, yeah. Okay. Doge will beat Blue Horizon to the moon. Okay, Glenn Smith. All right. Blue Horizon is Bezos's attempt at like SpaceX.
Oh, I see. So it's some
Blue
people want some
Origin,
billionaire
sorry, Blue
boxing
Origin.
matches there, I guess. Yeah.
Hold on. I don't even know. I don't think I'm right. That's Blue Origin. That's
very interesting.
all right. Looking here, Elon, Adair LePage. Hi, Adair. Do you see big pharmas having bottomed? BMY and PFE.
I can look at, let me look at PFE first. I mean, I was actually in a pharma adjacent trade earlier today. I was in that Novo Nordisk short. We took some nice little profits there. Yeah, okay. Why am I on the 10 minute? I'm very surprised that I'm on the 10 minute. Yeah, I mean, I'm seeing a bit of a bottom kind of forming here on PFE. Definitely lower highs. It could be a flat bottom break. I'd like to kind of wait and see a little bit with this one. Every time something gets close to its low or to its high of the day, I like to kind of take a wait and see approach before hopping into the trade. You know what I mean? So, but yeah, something like PFE is certainly enticing, and I do see what you mean with regards to, you know, definitely heading to the downside, down about 1%, lower highs. What else do we have? PFE, and then it was also BMY.
It is? Okay, thanks.
Yeah, okay, BMY is interesting. We had a triple top, and then we have a double bottom. This is one of the most fascinating charts I've ever seen. Not one that I feel like I have nearly enough experience to try to enter, mind you, because there's a whole bunch of wildness happening on BMY. But thank you very much for bringing this one to my attention, or these two to my attention, Elon. I was in Novo Nordisk earlier, so I do have my eyes peeled for those pharmacy-adjacent trades. Currently, actually, you know, I would even argue the trade I'm in is sort of pharmacy-adjacent. I am in a Walmart short here. I got short because I was noticing we were really having trouble breaking decisively above this 158.80, 159-ish area. I'm getting out at 158.80 because that's where we're kind of seeing, you know, a skosh of, I guess, resistance there. So if we break kind of above that or in that area decisively, I'm saying sayonara to Walmart. I am doing self-checkout and I'm leaving this trade. But, you know, honestly, like we've been holding pretty solidly at the point I got in, which was that 158.60. But, you know, I'm trying to be nimble. I'm trying to act quickly. If, like, we are still up on the day, so this was a skosh of a risky trade to begin with. But I generally, like, I found, at least in my experience, I've had, you know, decent-ish, you know, success with, if we see chop and churn at this level, respond to that. So yeah, currently looking to short. We'll see how this goes. And yeah, thank you for bringing those pharmacy names to my attention.
I just wanted to get to
Absolutely.
JB asked me to look at the Dollar General chart. So here, let's look at the daily. First of all, let's get the daily chart. So clearly, a level here at 150. We had it trough out here at 150, and then it came down into that 150 area, and then you had the Huadunk. And you could tell the Huadunk came on earnings day because look at the outlining volume, right? You can tell this was an earnings day, look at the volume, and this was an earnings day. And then typically you can see them at least 3 months apart, right? Because we get earnings every quarter. So typically if you see these volume candles separated by this distance, good chances are that it is an earnings related move. So that 150 level, very important on, let's put horizontal trend line on Dollar General. Now, where are we at? We bottomed out. We had clear support at above 100, in fact. We got into that 101 area, but the majority of the closing prints on the daily were above 102. So you know you had support at the $100 level, not surprised there. Since that time, you've been trending up. You've been making higher highs and higher lows, okay? So what I would say to you is, look for a possible gap fill into 150. This would be a very interesting swing trade between the current price action and that 150 area. Look for resistance at 150. That is for a possible swing trade, not obviously intraday. Now I gotta tell you, I don't know what's going on in America, but up here we have our equivalent of Dollar General, and it's called Dollarama. And these guys are opening up new stores hand over dang fist, because the consumer squeeze and they're broke. So they're looking for thrifty deals. Where else do you go? Obviously Amazon and some of these other online retailers. But if you wanted a retail play, like a brick and mortar retail play, Dollarama seems to be where it's at. I know I go to Dollarama for a bunch of stuff. Dollar Tree as well, Ram says. So we got a couple of those. But I know for a fact, Dollarama opening up a lot of new stores in Canada. I'm not saying that that's going to be the equivalent move in the States. It doesn't look like Dollar General's been having a very good year in a year where they should have been doing better because the consumer probably looking for better deals. And we know that that was the case for Cyber Monday and Black Friday. So you could possibly see a rebound into 150. Now, with respect to a closer look here on the time frame, look at this. Decent move here the last little while. Let's just say essentially from mid-November onwards, it's been having a clearly nice move up. Now, intraday, look at where we are at, 128-ish area. Well, look what we did on November 15th. The top, 128.16. Today, 128.12. I wonder if those have something to do with each other. Right? So again, you know, resistance level, support levels, you're going to see them over and over again. So intraday, I'll be looking for resistance at that 128 and change. Let's look at the 5-minute look here. Sorry, the 5-minute look. Yeah, so definitely resistance at 128, no question about it. I'd look for a rejection off that level until you get a decisive break. Wait for a closing print on a wider time frame above the November 15th high, really to secure the deal here. But interesting look. I'd say for a swing, look for a gap fill into 150. For an intraday look for a rejection at that 128, 128.25-ish area, possible short off there. Wait for confirmation though.
Interesting times. Yeah, I mean, currently this Walmart short has decided that it would not like to cooperate. We're still within my risk parameters because I set it very teeny tiny. But yeah, I mean, we haven't really decisively broken 158.70 yet. If we do, I shall get out of Dodge. I shall, as I said, self-checkout, goodbye, au revoir. But yeah, no, very interesting look on a lot of, that was interesting with the Dollar General and those, that clearly an interesting level for Dollar General. Also, I saw some mentions of Tesla in the chat, and I want to check up on Stressla, Besla, Mesla. Yes, still battling with 243. It's really interesting. We are still sort of, this upward channel we saw earlier is kind of breaking off a little bit sideways. We're really just chopping between that 242, 243 area. I would say decisive break in either direction could be what I need to be intrigued by Tesla. I guess not 240, I guess 241.50 is probably more the area of break that we need to the downside for me to be curious, for me to kind of wake up and be interested in Tesla. Right now, though, Tesla is a little too wild and a little too up on the day for me to want a long. And like I said, for a short, I need a 241 break. Or 241.50 break, sorry. But yeah, lots of stuff happening in the market. Currently just in Walmart, although I think I may leave that trade post-haste.
Okay, couple of housekeeping items before we get back into the lesson today. We have a 7-year note auction coming up at 1 o'clock that gets 2 bulls at a 3 on the investing.com app. The previous yield print was 4.908. So again, like we've talked about before, the higher the yield, the lower the demand for the Treasury note. The lower the yield, the higher the demand was for the Treasury note. So what's typically good for the markets is higher demand for that Treasury note and a lower yield. If the yield comes in higher than the previous print or what the market was expecting, in all likelihood, we probably will sell off, okay? So make sure to be ready at 1 o'clock for possible movement on the futures or the Mag 7 or some of the other related names, okay? At 11:30, we had the 1-year bill auction, the 52-week. It was met with more demand than the previous print. The previous print on the 52-week bill auction was 5.135. This time around, though, we got a 4.935. So about 20 bips there lower than we got last time. Hence, probably why we made a nice move into 16,075. But we'll have to wait and see if we can actually hold 16,000. After that, at around 1:05, so 5 minutes after the 7-year note auction, we are getting Vice Chair for Supervision, Barr, speaking. He's going to double dip. He's going to talk once at 1:05 and then again at 3:30. So his second little yapping session there will be on the closing show.
Hour.
I know, right?
Yapping
right?
session.
And then we have the weekly crude oil stock at 4:30. That's after the bell, so we needn't concern ourselves with that. So 1 o'clock, guys, make sure to be ready for some market volatility. We'll have to wait and see how that ends up doing. Any questions or about anything that we can get to in the chat, guys, make sure to tag Adara and I, and we would love to, we'd love to answer that. We have about 10 minutes until we restart the lesson. So anything, Adara?
Yeah, no, still, I'm just waiting to get out of Walmart. I decided this 175 area, we picked up really quickly once we got to 158.70, apologies. Once we got to 158.70, we kind of ratcheted up to 158.75 pretty quickly. So I have decided I would like to not be in this trade anymore. Okay. I'm short, only 15 cents out, but you know what? Okay, now we're continuing to fly higher. Walmart really got away from me. I probably should have waited for probably another candle of confirmation before I got in here. I can reflect and hopefully learn. But yeah, not a bad trade all in all. I am not going to cry myself to sleep about it. We're just gonna, hopefully learn and grow. But yeah, happy I got out of Walmart where I did, continuing to run to the upside. Now we're going down. I think Walmart just wants me to seem like I'm contradicting myself. So I'm going to let it continue to do its thing. 21, I'm going to leave it alone. I am also kind of interested in Eli Lilly because, we're headed to the downside now, despite the fact that Eli Lilly did beat Novo Nordisk in the weight loss game. And I only mean that with regards to numbers from that study. But that study was pretty strong numbers, basically saying, Novo Nordisk less effective than Eli Lilly's weight loss drug. But yeah, so Eli Lilly, we broke this kind of lower low. We were kind of in this channel for a while. I wanted us to wait to break this before I got kind of intrigued. Now I'm kind of intrigued. And honestly, I think I could kind of ride this too around where you're chopping and turning just before pre-market, 590. So that's like 50 cents, a dollar, but not a bad look necessarily. I will keep an eye out, but I do not want to make any sudden moves. Yeah, lots of, there's also some mentions of PayPal in the chat, and I think, yeah, with regards to Affirm moving, with regards to, we were looking at Square earlier, I think it really is, you know, a good time for these buy now, pay later, or payment adjacent stocks. PayPal actually looking very pretty. PayPal has a nice sort of ascending channel here. And if you're in a long on PayPal, my congratulations, because this is really nice. Really nice look.
All right. There we go. Alex Davis, good question. Look, I don't want to jump ahead here and start talking about RSI on a day where we are not scheduled to talk about RSI, but we alluded to it earlier, especially in comparison with the moving average convergence divergence, because they both kind of allude to overbought and oversold conditions. So, Alex Davis asking a good question. I have been trading coin every day. Check out the RSI on the daily. Is a pullback inevitable? So let's put coin right here so you can have a look. All right, so where is the RSI here? Look where it is. It is in overbought conditions. It is above 80. So let me make the line a little bit thicker there so you guys can see it. There we go. So the bottom line, there you go. There is the RSI line. And then you can see the y-axis over here. We have a price above 80. Now, what I want to make very clear is the way that I was taught how to use RSI is not just a simple function of selling when we are in an overbought condition and buying when we are in oversold condition. So in that case, it would be either above 70 or below 30. Some people use 80-20, some people use 70-30. Have at it, decide what you want to do. Now, the way that I was taught and the way that Michael Moss showed me how to use it is divergence between RSI action and price action. So what the hell does that mean? So clearly here we are at a top on the RSI. We are above 80. Clearly also on the price action, the price chart, we are at a top, a local top. This is actually almost a 2-year chart. This goes back to March 2021, almost a year, 2 years, sorry. Okay? So clearly we are at a top on RSI and on the price action. What you're looking for in this case, as I was taught, is to wait until there is a divergence between the crests on RSI and the crests on the price action. So what you're looking for is when a new high is made on price, but not necessarily a new high made on the RSI. So they begin diverging. The RSI and the price action begin diverging. And that's what you're looking for. And that's your indicator that the winds of change may be coming. Things are changing, where you're continuing to make higher highs on the price, but not necessarily higher highs on the RSI. In fact, what you're looking for is a decided lower high on the RSI, but you have a higher high on the price. When you get that sort of divergence, that's where I'd punch out of the trade, right? That's how I was told how to use it. I don't think it's as simple as selling above 70 and buying below 30 as, you know, some of the websites make it look. I think it's a little bit more nuanced than that. You're gonna have to let it develop a little bit more. So that's my little rant on that. I hope that helps. Who was asking me that again? Alex Davis, yeah. So shout out to Alex Davis there. Yeah, anything to add there?
Not much. Just kind of looking at Zscaler, because this was an earnings one. This was mentioned in the chat as well, that it keeps running. This one was down pre-market, actually. We had this really nice recovery from 9:30 on. And honestly, I would argue we have two price channels here. We have a price channel that kind of started about 8, I guess just around 9-ish, and we kind of went until about 10:50. Then we broke to the downside. So that would be, I will literally just draw it so we can kind of, I cannot draw these very well. I apologize. So this was our first price channel. We broke that to the downside. Then we started kind of a new price channel, I think, which is this one. So they're both upward price channels, but different kind of, you know, points of different extents, right? So this one was a bit steeper earlier. Now we're a bit more upward, sideways, what have you. But Zscaler definitely very strong. Looks like we might have gotten a slightly lower high here, though. One to watch, just thought that this double price channel kind of moment was kind of worth looking at.
Yeah.
So we had one earlier, and then we're having a different one now.
Great look, on Zscaler. I
Very
like these
interesting one.
companies. I got to tell you the truth. With so much competition between China and the United States, as well as you have to worry about Russian hacking as well. It's so important to be secured from a network perspective, and I think these companies are going to continue to do well.
Yeah.
That's just my little 2 cents.
And Zscaler got like a lot of analyst price upgrades, even though it did not necessarily perform well pre-market or post-market stock-wise. But yeah, analysts are interested in Zscaler, and so is the market now, apparently, because we're almost like up 1%.
Yep, I'm just responding to the boring man, letting me know that we have the 7-year note auction in 4 minutes. Yep, I talked about it already. We are looking to see how we do. That got 2 bulls out of 3 on the investing.com app. So I'm going to be quite attentive to how we do on that auction. We got a great VWAP bounce on the future, and you got that on Apple as well. Let me just flip back here. Yeah, good VWAP bounce on the future. Now it's just made a higher high. A first 5-minute candle to make a new high, pardon me. Thank you very much, JD. Shout out to you. Huge reversion wick on the SPY, says Spark Shop. Yeah, I'm kind of looking at the same thing, but on the NQ. B-Leach, can you speak on how does the auction affect the Chinese stocks? I don't know how they affect Chinese stocks, but what I do know is that the Chinese and the Japanese were the biggest buyers of U.S. Treasuries. And the story goes that they're not buying as much as they used to. So the question is, who's going to step in to fill that gap? Is it going to be the Saudis? Who's going to be buying, right? And lately, we've been seeing good demand for U.S. Treasuries, hence why we've been getting lower yields than the previous print, but I don't know how long that lasts for. We know that the Japanese were the biggest buyers of U.S. Treasuries, first only to the Chinese, who were second. The Japanese have shifted their buying to their own domestic bonds, right? So we'll have to see how it does. I mean, I don't know the answer to that question, but that's the connectedness that I can see between them. Whether or not we get a sell-off on Chinese stocks, I don't think is specific to the type of equity. So for example, if we get a better than expected demand print on the 7-year, I don't think that that's necessarily going to sell off Chinese equities and then run up North American equities. I don't think it's like that. I think it's more about who's buying these treasuries if the Chinese and the Japanese aren't. That's really kind of how I see that. All right, anything else here that we have to talk about? We have 2 minutes before we get the auction and we restart the lesson plan. In case you're wondering and you're just joining us, we're talking about MACD, moving average, convergence, divergence. We'll be getting to that in a sec, as well as these Donchian channels, donkey channels, as the chat has called them. We'll be getting to those in a sec. Both are based off moving averages, and hence why we're talking about them today, because we began the week's discussion by talking about moving averages.
Yes, yes. So now we're like going full circle. Now we're chatting about these moving average related, specifically the MACD. I mean, literally moving average, convergence, divergence, right?
Ma'am.
So I think it'll be, hopefully, we can kind of tie back. I mean, I think at least like for myself, there's kind of some through line between all the different weeks of lessons. But yeah, I think definitely with regards to yesterday with moving averages, hopefully now we can kind of take those lessons and utilize them for the MACD conversation.
Alan says, donkey reminds me of a poker friend of mine. You're going to have to give me more than that if you want to get an LOL out of me, man. I mean, I like how you got a poker friend. That's fantastic. Is there anything funny about him? But I don't mean to put you on the spot there. Is there any factor that can increase the volume without the share price changing, or maybe like options or a dividend? Very interesting question.
Just like a lot of, I guess to try to figure out what's being asked there.
Well,
lots at the same price, but just lots more volume,
but no price change. What I would say, an equilibrium between buyers and sellers. Right?
Okay.
Right.
Okay.
How often is that really going to happen, where you're going to have an above average volume print with an equal number of buyers and sellers? I don't know the answer to that, but that strikes me as one of the possibilities.
That's interesting.
Right?
That is interesting.
Yeah. The reason I ask, he goes on to say, or they, I don't know if it's he or she, is because sometimes I see very high volume in an hour and share price is the same or slightly changed. I'd like an example if you've got one so I could analyze it, but offhand, I'm just gonna stick with what I said earlier. I have an equilibrium between buyers and sellers on above average volume. That would basically have big volume candles, but no change in price. What's the other question? Sharif got no chill today, huh? Says Fee rhymes with AMC. What's up, man? Results, bond auction. I don't know yet. This app takes forever to give it to me. So anybody who's got the bond auction result, the 7-year note, please put it in the chat. The previous print on the 7-year note was 4.908. We are still waiting, well, at least I'm still waiting here for the result to come out. It is 1 minute past 1. So I guess the market will tell us quickly because we'll either pop or crash. So we'll have to wait there. Anybody got that in the chat, make sure to tag me, please, so that I can announce it. But otherwise, we'll wait until we get that. All right, let's restart, baby. Moving average convergence divergence.
Divergence. Yep. Let's do it. MACD.
Oh, let me interrupt you. Sorry, Brendan sent it to me. Oh, okay. He deleted it. So
he redacted. It's been redacted.
He redacted it. All right, go ahead.
So the moving average convergence divergence is let me just get my notes up here. Or the MACD is basically calculated. It's an indicator and it's a lagging indicator, and it is calculated by subtracting the 26-period EMA or exponential moving average, which is, as we discussed yesterday, the exponential moving average is the one that is a bit more receptive to more recent price development. So still a lagging indicator, but a bit more spry, a bit fresher. So basically, you get the MACD by subtracting the 26-period exponential moving average, EMA, what have you, from the 12-period EMA. And so then you also have a signal line, which is the 9-period EMA of the MACD line. So you've got a 26, a 12-period, and a 9-period EMA all kind of playing into the MACD thus far. And it's also best used kind of with the daily periods, and then you just use that default setting of 26, 12, and 9 EMAs. And the MACD is triggered, or the technical signals are triggered when the MACD line crosses above the signal line, so that would signify a buy, or it falls below the signal line to sell. And it basically can help you gauge if a security is overbought or oversold, and it alerts traders to the strength of a directional move or warrants of a potential price reversal. So basically, the wider the distance there is between the MACD and the signal line, the more likely a stock is overbought or oversold. But there can be false positives. That's the one thing with MACDs, lots of false positives. And also there are potentials, or there is the potential that it will alert you to a reversal that does not come to fruition. So like all indicators, it is best used with a skosh of skepticism, and also in tandem with other indicators that are working for that stock. But yeah, so just keep an eye out, and do not, be wary, but keep an eye on the MACD. That would be my take on how this one works, and that is its basic technical definition.
Yeah, bang on, by the way. Now, some housekeeping. The 7-year note, as you probably have been able to look and to see, the market has sold off, and now we are below 16,000. We're at 15,990, and that's because we got the result of the 7-year note. This surprised me a little bit. Last time around, we got a print of 4.908, okay? So just a smidge below 5%. This time we get 4.399, so almost 4.4. Obviously,